Hello, everyone, and welcome back to another Educational Insights from Five Plan Partners. Mark Hume here, and today I want to talk to you about, are you maximizing or are you wasting money with your employee benefits? A lot of you have fantastic jobs where your employer provides you with wonderful benefits, but they may also provide you with a little bit of fluff that's not necessary. And this is no judgment on the employer. The employer delegates a lot of that to the different insurance companies. And you got to remember that insurance companies are incentivized for sales only. They make more money if they put you in more products. So just remember that. There's no judgment here. This is more of a guide to making sure that your specific situation is maximized and you're not wasting any money on things that are fluffy to you, because what's fluffy to you might not be fluffy to someone else. So we'll start with health insurance. If your employer allows you to have your spouse and your family on your plan, then you should compare both. That can be really important, but that can also be up to the employer. They may have some requirements in place that says each spouse has to be on their own. Then you take a look and see where the child would best be for the two of you. The next one is a 401k match. This has become pretty ubiquitous. It's pretty much a layup these days, but don't want to just completely gloss over anything. A 401k match is an instant return on an investment that's really hard to match anywhere else in the world. So let's use a pretty standard one. If you are required to contribute 6% to receive a 3% match, you're getting an immediate 50% return on your investment, and that is basically free money. If free money is sitting there on the floor, I'm going to pick it up, and you should do the same with your 401k match. Then, if you're a highly compensated employee and you have the opportunity to use different deferred compensation opportunities, you should certainly explore what that means. Some examples of these deferred comp opportunities are 457s. Those can be available to a wide array of employees, some of which it may not make sense for them to defer those dollars. Because you have to remember that those dollars are deferred until retirement years. And then some other deferred comp plans that are available to executives and other highly compensated employees allows you to defer this year, and then you specify when it comes out. Guessing into the future can be a little bit tricky, but depending on how much money you're making now and what you plan to do in life in the future, it might make a tremendous amount of sense. This is a really great opportunity to sit down with an advisor on our team, or to coordinate with the CPA to sort of create the best strategies that might apply to you. And this is a very personalized piece of planning work. And so I encourage you, anytime you have opportunities for deferred compensation, to dig a little bit deeper. Employer-provided life insurance. Many folks get 1 or 2x salary, or somewhere in between, or a little bit less, 1x. That's typically provided, and that makes a lot of sense. When it comes to voluntary life insurance, and that's pretty self-explanatory, you're choosing that particular benefit. It's important to understand how your health and your age relates to life insurance that's available in the independent market outside. Because if you're in fantastic health and if you're very young, it might benefit you to lock in insurance outside. But if you have a chronic illness, type 1 diabetes, other digestive issues, if you've been diagnosed with cancer in the past, the employer-provided life insurance up to a maximum amount without medical underwriting might make a lot of sense. If you have a kid, dependent care FSA makes a lot of sense to maximize that out, because you get that pre-tax advantage and you can apply that amount, and that amount changes from time to time towards your child care. That's a no-brainer if you have children. And HSA is an interesting topic that I won't go into too deep here. That's really a best conversation one-on-one, because it really depends on what your health is, what your long-term goals are. But if those align with the way that I sort of think about HSAs philosophically, it can be an incredibly valuable tool. But you need to understand what those details are, and you need to really understand what delayed gratification means, because in addition to being an insanely valuable tool, it is most certainly a delayed gratification tool. Disability insurance is something that's often provided. Sometimes you have the option to have some phantom tax recognized on it, which would make the benefit tax-free. That's important to know, and it's important to consider if that makes the most sense for you. I think it really depends. And then you also need to understand, once you get into your 60s, disability insurance begins to have a compressing benefit. And so you'll want to understand, how much am I paying? If I became disabled today, how much would it be worth? And see if that opportunity cost really makes sense. And then you get to something that can sometimes be a lot of fluff for folks, but folks can make the emotional purchase. And these are health-related incentives. I'm only going to pick on one. There can be a lot. Cancer policy is a great example. If you have someone in your family who's had cancer, you're more likely to say, yes, I'll take that cancer policy because you are told that you're going to get $50,000 cash immediately if you're diagnosed with cancer. Well, that sounds pretty good. And, Aunt so-and-so had cancer, so I think I should probably get that. Sometimes it makes a lot of sense and sometimes it doesn't. This is also a really personalized thing, but it's also where I see the most fluff sort of added into employee benefits. I'm always a big fan of if we can protect the entire pie. I'm not necessarily interested in just paying for one specific slice. So that's a real personal conversation that I always encourage you. Have someone who pays attention and thinks about your entire plan and understands these benefits to give you perspective, especially when you get into some of these more specific health-related incentives. So quite a few different topics today. Tried not to go too in-depth on any particular one. Just give you a real high-level overview of what I've seen and how I think about a few of them. If you want to ask about any of these benefits and dive a little deeper, have your employer benefits booklet ready, reach out, give us a call, and we'll be glad to talk through what might make the most sense for you. So thanks everyone for stopping in again. I hope you enjoyed this episode and I look forward to seeing you next time.